I'm here with Graeme Bibby, Chief Investment Officer at Partners Wealth Group. Graeme, first up, thank you very much for attending and participating in the Inside Network's Alternatives Symposium 2026.
You're welcome. Great to attend.
Graeme, how would you characterise the current macro regime, and what does it imply for the pricing of alternative investment assets?
Well, I think we have more uncertainty, certainly from the geopolitical lens, but also from public markets where we're seeing that playing through interest rates. Credit spreads are remarkably tight, but equities are certainly more volatile, pricing in a lot of risks, geopolitical, AI and others.
To what extent has the higher cost of capital altered the risk-return equation across private markets?
Well, the cost of capital is incorporated in the discount rate, and that affects the valuation. So it's pretty critical as the cost of capital goes up, that long-term value goes down. And so you've got to assess that against where the actual risk is in the volatility. So the return is lower in the long term, but may not be as low because you're going to hold those assets for a long time.
Where do you see valuation risk building in alternatives, particularly among those assets that are not marked to market as frequently as others?
I think those who are institutions have pretty solid valuation policies, but even so, a lot of those multiples have crept up over time. Think about the airports and ports that were bought at cheap valuations, lower multiples. Now they're on double digit into the 20s and sometimes higher. So I think that's where some of the risk is. But then in the areas where institutions don't play, the valuation policies can be somewhat more flexible, and so you really need to pay attention there.
Are liquid alternatives likely to behave as true diversifiers if we have a period of prolonged heightened volatility?
Well, some really can. So there's hedge funds that can form part of a diversified portfolio where they're not really correlated. But if you're talking about listed REITs, listed infrastructure, then they can be quite correlated to listed markets and may not provide the diversifier that you want.
Over the next 12 months, what macro variable do you think has the greatest potential to cause a repricing in the alternative assets?
Well, that's a really interesting question because it comes back to the beginning where it's about valuations and interest rates. So interest rates are central to valuations, and particularly those long-term rates. So if we have a period where those inflation expectations become unanchored or shift, then those long-term interest rates go up, and that affects the pricing of everything.
Graeme Bibby from Partners Wealth Group, it's a pleasure having you here. Thanks for your time.
Thanks, James.